a tax lawyer answers the internet. If this is the first time we're meeting, my name is Edward Collins. I'm a lawyer. I specialize in tax, estate, and business law. I'm also a serial entrepreneur. I own 9 companies that I've built and scaled up to and through 6, 7, and even 8 figures each. Not to mention our real estate portfolio of both residential and commercial. And I say all of this not to be braggadocious, but just to share with you that I'm academically trained in the languages of business and money, and I have practical experience putting that training to work in real life. Now, I'd like to share with you some answers to a variety of common questions that we often get from the community on so many different topics. So let's dive right in. What considerations need to be made when trying to figure out whether income from your rental activity should be reported on Schedule E or Schedule C? It really boils down to what activity you're actually engaged in, right? Because real estate by nature is considered by default to be passive, and passive activities flow through to your Schedule E. So if you are engaged in long-term, short-term even, mid-term rentals, no matter what that rental activity, that income that's generated thereon is going to fall onto your Schedule E. It could potentially get to Schedule E through the non-passive side of your business, right? So for instance, let's say you have an LLC that is elected S corporation tax treatment as an example, and you're actively materially participating in that particular business, and you're rendering services in that business that are subject to services that are rendered really inside of the context of real estate. I've definitely walked into many scenarios where business owners have acquired real estate in an S corporation. One of the things I say often is pretty much as a really good rule of thumb is you never really want a corporate entity owning your real estate because there's a lot of negative tax consequences of that particular approach. However, if it did happen, the activity associated with real estate is still just going to flow through that S corporation and find its way back to Schedule E. Because again, the real estate activity by nature is going to be Schedule E activity. Is it better to renovate an existing investment property that you have, or is it better to use those resources as a down payment for a second investment property? I host an event throughout the year. It's called Compound Asset Acquisition, and we dive deep into all different subjects having to do with real estate from an investment perspective, because real estate is an amazing tool in your journey of real wealth creation. But when it comes to figuring out what to do with your dollars, that's more of a fundamental foundational concept having to do with financial literacy. You see, I teach inside of my private membership community called the Up-Level Community. I teach this concept that I refer to as giving your dollars a job. You see, if you don't give your dollars a job, they become the employee of someone else. And ultimately, when it comes to figuring out where do you put your dollars from an investment perspective, you have to evaluate what is your return on that investment. So if you're analyzing a renovation that you're going to consider for an existing property, how will that renovation translate to increased cash flow relative and compared to utilizing those dollars for the acquisition of new cash flow sources? That's really what it comes down to. It's not simply, do I put dollars in A or in dollars in B? The real question is, what is my return for the dollars invested in either? What would be the top 3 books to help someone learn more about taxes? I'd probably recommend Tax-Free Wealth by Will Wright. It's definitely a great book. Another book that should be in your consideration would be Taxes Made Simple. And then finally, a book that I think every business owner should read is Deduct Everything by Eva Rosenberg. These would probably be the 3 books that I would put on the list at least to get started, but there are so many more books that you should be looking into. And if you are not in the constant lookout, if you will, for those books that have subject matter that affect your life, you see, so many of us will go to university or even just manage our way through primary and secondary school and read a lot of books for school's sake. But the reality is so few of those actually make a difference in your life day after day after day. But books like the ones I just mentioned, that can actually help move the needle for you. It can help you learn a pretty complicated system that in some regards I think is complicated on purpose, but it can help you navigate that complicated system to learn how to keep more of every single dollar you make. Then once you get some of those foundational principles in play, you could consider jumping into communities that actually do this on a regular basis, meaning share information that is truly transformative. Because I don't know about you, but most of the business owners that I talk with aren't necessarily all that interested in education. What they want is transformation. Do I suggest going to college before starting an online business? The long and the short of the matter is that it's a pretty complicated question to answer because there are a variety of different reasons to expose yourself to a university or college type of experience that are different than just the four walls, if you will, of the classroom, right? It's more than just what happens inside of individual classrooms. It's the entire interactive experience between you and your potential classmates, you and your teachers, you and the other administrators at that particular institution. But what I could say is this: don't waste your time going to university. You heard that right. I didn't mean don't go to university. I just meant don't waste your time if you're choosing to do so, meaning every moment that you invest is in and of itself priceless. So you want to make sure you get the best return for the exchange of your time as possible. So if you're going to go to university, make sure you leverage all of the other aspects. Now, does that necessarily derail you from getting engaged in business? I say no. I personally worked 3 jobs when I was in university. Right now, I needed to do so just in order to put my way through school. But regardless, if you are interested in taking your life and your ultimate business ecosystem, your enterprise, if you will, to the next level, you can't be afraid to start. Because here's the thing I can guarantee. If you are interested in the pursuit of entrepreneurism, you are going to hit roadblock after roadblock, and you are going to hit pothole after pothole. But it is the experience of working through and navigating through those things, that struggle aspect of it, that makes the learning possible. After all, a baby learns to crawl when his toys are just out of reach. When it comes down to it, the concept, the struggle that you will go through as you're building your business is an important component. But let me also say this: it's not necessarily to go through all struggle. What I mean by that is you can learn vicariously from others to help shortcut your particular journey. But here's the end all and be all. Get started. No matter what your interest in an outcome is, all outcomes require you to take action. Is it a good idea to first figure out what type of leverage or credit you can get access to before deciding to jump into a business? I could say that you're probably putting the cart before the horse here. Most of what you hear online these days is how to go ahead and open like 5 different credit cards and cash them all out so that you have access to capital in order to do X, Y, and Z with it. Well, if you're really interested in building a real business, your goal should be first and foremost to figure out what problem is it that you are going to be solving with your business. Because all money follows value creation. And problem solving is a pretty big value creation opportunity. So that's what I would focus on, figuring out what problems to solve with regard to the business enterprise you're interested in engaging in. And then once you figure out what problem you're going to solve, then you have to figure out how to actually do it. And you want to determine in the mix, is there a product market fit? Meaning, is the thing you are proposing to either do or sell going to be something that is consumable by your intended avatar, your ideal audience member for the product or service that you're offering? Figuring out those components is way more important than figuring out whether or not you'll qualify for borrowing. Because if you can't figure out how to do what it is that you're doing and sell what it is that you're selling, it doesn't matter how much money you borrow, you'll end up having to pay it all back. And most of the time, that'll come out of your pocket. So there you have it. If you have not yet checked out parts 1 and parts 2 of this particular series, you definitely don't want to miss those. Go check those out. And before you go, if you've liked this content, if you have not yet subscribed and clicked that notification bell, what are you waiting for? You don't want to miss out on content like this because another part is coming your way soon.